Well, let's shift focus now. The African Development Bank has released its macroeconomic outlook report for this year. Now, in summary, the bank sees a welcome recovery and economic resilience for African nations in the short to medium term. However, it still remains cautiously optimistic given considerable global uncertainties. Now, the bank is forecasting real GDP growth of 4% between 2023 and 2024. That is 0.2 percentage points higher than the 3.8% recorded in 2022. Average inflation is projected to decline from 13.8% in 2022, which of course was the highest in more than a decade, to 8.8% in 2024. However, the bank warns that this stable growth outlook is threatened by several issues, including the ripple effects of the Russia-Ukraine conflict, the COVID-19 pandemic, tightening global financial conditions, and of course an increase in domestic debt service costs, as well as climate change. Well, let's now get into that report. We're joined by Professor Kevin Urama. He is an acting chief economist and vice president for the Economic Governance and Knowledge Management Complex at the Africa Development Bank. Thank you so much for joining us on the show today, Professor. Now, I'll start off with the fact that we heard UN Secretary General Antonio Guterres at the World Economic Forum yesterday basically saying that the struggles that the global economy is currently facing are piling up, and he said this in quotes, piling up like cars in a chain reaction crash. So given this grim picture that everyone seems to be painting about the outlook, this report doesn't feel as negative. It actually feels more optimistic. So what factors do you think will keep Africa's outlook stable in light of the confluence of multiple shocks and, of course, global uncertainty that we're facing?
Thank you very much for having me. And actually, the African continent has really shown a lot of great resilience in the face of all the multiple shocks that you've mentioned. The continuing impacts of COVID-19 conflicts that we see, including the Russia-Ukraine war, but also the continuing impacts of conflicts that are on the continent and impacts of climate change. Now, the African projection of growth has been very stable, as you already said in your introduction, and there are several factors behind it. One is the increased demand for commodities and expected increase in demand for Africa's owned commodities like gas in order to fill the gaps that is created by the supply chain disruptions in the global markets, but also rare earth minerals and green minerals that are abundant in many African countries. So that commodity boom, you may say, is one of the major drivers that has allowed Africa to continue to grow in the way that it has. But again, you see that African countries across the region has had a lot of good governance and prudent fiscal policy management in the past few years. And that dividend that we had in the build-up before COVID and then the lessons learned during COVID is what countries are doubling down on. And we as the African Development Bank Group, working with them on macroeconomic policy management and also public financial management. So we're seeing a very good positive trend in that reaction, in that area. And many of the big economies in Africa, Nigeria, South Africa, Egypt, and different countries are actually moving in the right direction with regard to external resource mobilization. We have seen foreign direct investments double since the dip we had during the COVID-19, now doubling up to $83 billion in 2021 from what we had as 38.9 billion in 2020. And this doubling in FDI is marked by the confidence that countries and investors and everyone has in many of the African countries, and also the access to these resources that I have talked about. But again, Africa is the growth pole of the world. If you allow me to say the next growth pole of the world, with a market size of 1.46 billion people, 40% or 60% of them being youths, and the huge potentials that Africa has in blue economy, with 75% of its countries having huge potentials in that area. but also the huge natural resource endowments in the mineral sector and in all sectors that you talk about. This continent hosts about 20% of global annual production of five key minerals. So if you think about cobalt, platinum, we have the continent hosts 80%, 77% of cobalt, 51% of manganese, 46% of diamonds, 39% of chromium, 22% of gold deposits, and over 60 to 65% of arable land still left to feed the world. So when you think about these huge markets and huge potentials and combined with good macroeconomic fundamentals that we're seeing, all we can see is a positive outlook. But I have to say that that expected 4% growth rate is not good enough, because we need up to 7 to 10% growth rate to be able to pull people out of poverty. So despite that improvement, we still had 15 million people pulled into extreme poverty in 2022 because of this confluence of factors you've mentioned. Thank you.
And Professor, we also have to be realistic about the outlook, because we know they're not just external threats to Africa's growth, such as what's happening with Russia, the Russia-Ukraine conflict, as well as the slowing down in demand in certain markets. Here on the ground, we anticipate some restrictive monetary and structural policy this year to, of course, check rising inflation, which is happening all over the world. And this could suddenly exacerbate the cost of debt servicing and push some countries in Africa into a high risk of debt distress. We've already seen it happen with countries like Ghana. So what are your recommendations then for regulators this year in terms of policy?
Yes, thank you very much. You point on a major challenge that has been affecting the whole world, not just in Africa. But as you also said in the introduction, we see that the inflation on the continent is expected to slow down in the near future, 2023, 2024. And I have to say, actually, we expect a slowdown to the numbers that is much lower than what it was pre-COVID era. So in that area, that is also because African countries have been engaging in a lot of coordinated monetary and fiscal policy management that is helping to address the shocks that we have. A lot of the inflation we had on the continent in 2022 were imported inflation because of the spillover effects of the hikes in the prices of food and fuel, given that over 40.7% of disposable income in households in Africa are spent on those two commodities. But managing foreign exchange reserves remain a fundamental thing that countries' central banks need to keep focusing on, while at the same time trying as much as possible to ensure that there's fiscal prudence on the continent. And then timely and aggressive monetary policy in areas where there is uptick in inflation, like you've mentioned, in order to contain that inflation, while keeping in mind the impacts on the poor and on small and medium scale enterprises. Mixing fiscal and monetary policies to address that effectively is one of the things we're already seeing in many African countries, and we'll continue to encourage that continues to happen. But we need to take decisive structural reforms to address the debt issue, because the debt issue has been persistent. And that is why the African Development Bank has launched the Public Financial Management Academy to help countries across the whole cycle of the public financial management, from scaling up domestic and external revenue mobilization to public expenditure management and budgeting, prudential borrowing, deepening the financial market, and just managing public resources properly, and also strengthening fiduciary supreme audit institutions to ensure that there is transparency and accountability. We're seeing a lot of movement in that area, and if we can continue in that traction that we have seen in 2022, the continent will be recording much more progress. But again, we can't forget the huge opportunities that the Africa Continental Free Trade Area brings. Africa is beginning to come together as one continent, one block market, 1.46 billion market size, and trillions of commodity flows that we can see, in worth of commodity flows that we can see potentials in. So that particular policy is a huge aspect that we need. but also requires structural industrial policies that will allow to attract private sector investments onto the continent. So we need
Going forward.
local content policies and franchising policies. There are a lot of that you can look at in the report itself. Thank you.
Well, Professor, so much to discuss on this report, but we do have to leave it there. We've run out of time. But thank you so much for joining us on the show today and for those great insights. That was Professor Kevin Urama, Acting Chief Economist and Vice President at the African Development Bank.